final day. There was a lot of end of quarter,
a little bit of noise,
sort of quirks in there, and not a lot of noise on the trade front. I guess that helped.
That's right. Yeah. So that was clear. I do think it was really much more relief than enthusiasm that was driving us, even at the highs of the day. We basically had a little bit of pressure release from the emerging markets. They were very stretched to the downside. They bounced. The dollar came off the high. All these areas, including the banks, which were stretched to the downside as well, got a little bit of relief. And then the markets kind of took some heart in that, but not necessarily a lot of follow-on buying.
But Mike, I mean, I want to come to that. The last half an hour of trade, if you look at an intraday chart, the picture is not attractive. We really lost the momentum, and we're going into a week where volumes will be down, and any slight negative sentiment we might get next week will be accentuated.
It probably will. I do think because it's the last day of the quarter, and you do have a major index rebalancing going on, I don't want to excuse it. It obviously showed that there was not enough buying interest to keep the market above these levels here. But it does seem like it was much more about exactly pairing things up at the close and essentially some rebalancing going on. So that's why I don't want to extrapolate too much from this fade. However, the fact that the bank stocks across the board could not hold a bid is really not all that positive, and it might again just be that Treasury yield curve making new lows.
So Sandy, I'll go to you. I totally mispronounced your name. I'm sorry. Sandy Villery, co-portfolio manager of the Villery Balanced Fund. How does this set us up for the second half of the year?
I think it's going to be a continuation of the first half. So you had everything from deregulation and lower corporate taxes, and of course the trade war had the Russell 2000 up, over 7% in the first 6 months, and you saw it dramatically outperform large caps. So I think that's going to continue. The other thing is you've got the larger cap dividend-oriented companies, your Procter & Gamble's and your Pepsi's, that used to have dividend yields that were very competitive with the 10-year. Now that the 10-year has risen to these levels, I think that there's going to be continued pressure on those names, and people are going to play offense rather than defense in the second half, just as they did in the first half.
John, when we consider the sort of sector performance, clearly technology fantastic for the first half of the year, consumer discretionary very strong as well. Do you think you're going to see rotation in the second half of the year out of those sectors?
Potentially out of technology is the one we're thinking about. They have the decelerating earnings trends to them. Probably not consumer discretionary. That's an area we're looking at. We do see continued rotation in general in the sectors, Wilfred, but maybe not coming out of the consumer sector.
Talking about consumer names, we should hit shares of Nike leading the Dow higher today, hitting an all-time high itself after reporting strong earnings last night. Earnings beat, revenues beat. The company said it saw a return to growth in the U.S., and that is sustained. 3% gain in sales for North America. Double-digit growth internationally, led by China, up 35%. It was all driven by new product launches, higher average selling prices. Investors certainly liked what they heard and got that bonus of a $15 billion buyback. Take a look at that company now, Mike, up 30% of the year, and we wonder whether that multi-year high valuation can stand and continue to grow.
Yeah, really, you've kind of rebuilt the growth stock premium into Nike. That used to be there years ago and then kind of fell away and now is back. A lot of the conventional wisdom said that in this new world of commerce, of consumer, it's the brands that were going to thrive, right? If you had this recognizable brand, you could sell across any platform. And it almost seems as if investors are betting heavily that Nike is one of those winners. Again, to your point, sir, I don't know if we've already priced in a lot of, the next couple of years of good news.
You talked to, a lot of analysts raised their price targets today, and now at 80 is average, which is where the stock is now. But you talk to someone like a Paul Trussell at Deutsche Bank who says there's another 10% upside. It's a complete rebasing of the stock because we've seen this inflection point at a much faster momentum. And he said it shouldn't take long to get there because they're showing that their new product releases at higher prices are working. And by the way, apparel was even stronger than footwear. For a period where everyone was thinking athleisure was dead, it's still pretty fashionable. Lulu is still comping 19%.
It is true.
And Nike is still seeing growth.
You'd never argue against another 10% for a name like this if the market holds together and consumer trends stay good. But in terms of much more upside from there, it's a big question given the move from October.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.